Hi, this is Jeffrey Kurt Financial Group. Today's Friday, May 10, 2024. I had an interesting conversation with a client, and he's a viewer of the videos, and he asked the question, why would anybody buy a 30-year bond at whatever the yield is when they can get a better yield at a higher rate? So this speaks to the yield curve. So if those maybe not familiar, the yield curve is just what the yields are at the various time frames from whatever from 3 months out to 30 years. And here's a picture of it, and it shows it the various various yields for various time frames. That's the yield curve. So historically, the longer the longer the money's invested, you get a higher rate. But because of monetary policy and tightening and all that stuff, this yield curve is very flat. It was inverted in the shorter term, being higher than the long term, which is again counterintuitive, but because of the tightening on the short end, which is the interest rate the Fed can control, the yield curve got inverted. It's kind of it got flattened out because of the longer term interest rates moving higher this year. And returning to the question, there's multiple reasons, but I try to keep it quick. Sometimes just people want to lock in that yield. So if rates come down, you say you buy a 6 month CD, a 1 year CD, and so 6 months, 1 year from now, you've got to reinvest that. And if rates come down, then you've lost opportunities, from rather than locking in at a 3 or 4 year, 2 year maturity or whatever it might be. The second, I think, important thing is that the bond market's a huge market. Fixed income market's much bigger than the stock market. You get all the type of bonds, treasuries, corporates, municipals, sovereigns, and so there's always trading going on. So institutional investors oftentimes would look at these longer maturities and lock in because they've got a liability they're trying to match. And so so that's part of it. There's also institutions will buy the longer um, dated maturities, but also using hedging techniques to try to hedge away and protect against rising interest rates and losses from there. So kind of a complicated issue. If I can help anybody, please reach out to me. Thank you for listening. Have a good weekend. We'll be back on Monday. Thank you. Goodbye.